Good evening, one and all. Welcome to Epic Learning Center. Epic Learning Center is one of the arms of Epic Research, which is engaged basically in imparting knowledge, providing educational seminars, webinars to traders and investors, be it of any age or any profile, and equipping them with the best of the methods and dynamics of the market to make sure that they are alert in a 24/7 global financial market. Myself, Loveless Sharma, I'm heading the research department, I'm head analyst, and this particular webinar focuses on KLSE and Singapore Exchange market wrap up and technical forecast. Since we are beginning a series of webinar for our international client, specifically from Malaysia and Singapore, all these webinars will focus on the market, its wrap up, and some technical forecast along with some one or two recommendation on each of them. These are some of the contents that I will be taking you guys through during this webinar. Some of the highlights I'll show you and some global news which are right now prevailing into the global financial market. Since we have had a lot of volatility and news event in December, as we enter into the holiday season, it is just about the wrap up of what has happened in the market, how the United States Federal Reserve decision and its impact on global exchanges. So these are some of the things which I'll be sharing with you guys during this webinar. Then in the end, I'll give you some of the market outlook and some recommendations. Then I'll be happy to take up your queries in the end. About Epic Research, well, we are a SEBI registered advisory firm, having been awarded and rated by NSIC, SMERA, Dun and Bradstreet, and Leadership Excellence Award. SMERA basically stands for Small and Medium Scale Enterprise Rating Agency. We have client base and services which we are providing and rendering to United States, Australia and Middle East with over 15,000 satisfied customers across the globe with over 80% accurate trading calls. We are also one of the leaders in providing recommendations in crude palm oil and FKLI derivatives. We provide need-based expert advice in these of sub-domains which uh, cover from equities market to commodity, currency, some premium and corporate research solutions, fundamental reports on specific stocks, and international markets covering Singapore, Malaysia, Shanghai, Hong Kong. These are some of the rewards and recognitions which we have earned through our credibility amongst clients. We have won Brand Achievers Award for Most Innovative Product, Best for Financial Research Services in Asia by Wealth and Money Management Awards, International Quality Crown Award, Leadership Excellence Award, and then some of the certifications. Now, coming on to the most important and crucial part, global factors at present. Well, Asian stock markets are finishing with big gains as anticipation builds for the Federal Reserve decision whether to raise rates after 7 years at ultra low levels. Well, if you are a smart investor, if you are a smart trader, if you see market has already given up quite a rebound from a technically oversold level. I mean, the smart money was actually made a day before uh, the Federal Reserve was going to announce. People made a bullish bets in the market. If you look at the data after the market, much of the buying was seen at lower levels, which I'll be telling you through chart, which I also personally uh, guided in my last webinar about the crucial supports, what are the current technical scenario we are into, and how we may see in a kind of a rebound. Stock markets have benefited from low interest rates, but what's important is that it can be interpreted as a vote of confidence in the world biggest economy. What is crucial over here is that even after so many years, uh, it could, of course, weaken currencies against the dollar in coming time, but it will actually potentially boost the trading reliant regions export, which we have seen a capital outflow in last 2 or 3 months after Chinese bubble crisis. We have seen since July a lot of volatility was there into the market, and we have seen a market wiping out around 3 trillion. Uh, but that impact did came on to Singapore and Malaysian coast, and we have seen a kind of a capital outflow from these index. But if you look technically, we are into much better place right now, because we have had a rally from 2013 2014. We have had a decent rally, so this was a kind of a correction. You can say things fall in places, and this was overdue, so it is much better at now, and things are quite available at a very cheap valuation. If you go for technical analysis, most of the Asian exchanges are oversold, of course, and they are in a falling channel. So coming on to the few trading session, you may see some kind of a rebound in coming trading sessions. How I'll share some charts with you, give you insights about the specific index. See, a Federal Reserve will now gradually take next step. Asian equities are eased. Whatever things which were there into the market, it has been factored in by most of the economies, most of the world, most of the global indices. What now depends is basically the economic data that we will have from in Singapore and Malaysia, since we have going to have a holiday season in next 2 weeks towards year end. Coming in January, a lot of important economic data will depend. The economic activities that has happened back in November and December, and its data will define the market's uptrend. We may also see some kind of a breakouts. Coming on to the next slide, I'll share some kind of a charts with you guys, which you'll see. Okay, this was my previous week analysis, my previous week technical forecast. If you see, I've clearly mentioned that we are into a falling or declining channel, quite close to a wedge. If you draw trend lines from here, and I clearly mentioned that we can actually see these kind of level on the chart, like 2760, 2790, if you have attended the previous webinar. So this is quite uh, simpler in terms of the analysis. If you see, we are into a wave pattern over here. Now even if you consider these waves, we are going to end this particular wave pattern over here, and we may see some kind of rebound. Now what happened here this week is, you'll be surprised that we are seeing a bullish green candle formation from the same support. It's a weekly chart though. The best part about this particular chart over here is I've inculcated that as well on the here the RSI. If you look at RSI, it is still oversold at 35.85, though it has reversed from 20 level. But on a weekly chart, since we have had a weekly closing today, we are moving towards holiday season, so there won't be much of the activity now. But if you see weekly chart, you'll clearly see that on the same level, this is we have made a double bottom formation over here. 2740 has been a crucial support. Now coming on to 2740, back in like quarter 2 of 2012, we have seen a smart rally. Then we moved on to some kind of a correction. This was again the smart rally. This is the steep fall which we have seen. But you look at the weekly chart, you'll see a positive or bullish divergence on the chart. The markets did bottom out here, and this is another bottom which we are having. If you see the patterns, it's quite simple: red, green, red, green, red, green, red. So it was simple that we may see some kind of a short covering as well and lower level buying, which did came. But you go for the analysis or through indicators, leading indicators like RSI, you'll see a bullish divergence over here, which is very, very positive for the index of SGX. While if you see RSI, it has given a crossover. The black average has already moved against the red one, and we have seen it reversing. So MACD as well has given a positive crossover here, while the prices are now into expected to be a positive zone. If you overall look at pattern, if we break this trend line on the upside, 2860, 2865 on a closing basis, we may see a kind of a third move over here. This can be a B C D formation. Now we may see another leg of round towards here. What you need to look at is the economic data that will be having in January, which will show some kind of activity of Singapore in last 2 or 3 months. So this is SGX Straits Times Index. The RSI is still showing a bullish divergence signs. We have as a positive crossover. The last crossover was actually here, which we have had in last quarter of 2014. So this is again the last quarter of 2015. Prices and indicators are repeating itself, so a kind of a reversal pattern seen again here, which we have seen last year. So we may see a kind of a this another wave towards higher targets. So stay on the buy side. Buy on dips is still a good strategy in coming months. Now, this is KLSE previous week technical forecast, which I've shared with you guys, and I clearly instated that we may see a fall towards 16, 20, 16, 30 levels, and it was in declining channel, retracement of 50%. We may see a test it 50% at 1623. The next setup on chart clearly shows downtrend extended to 1620, and a pullback, I mentioned it last week, is seen in this particular index, else it may follow to 61.8. Now if you see now this week, same thing has happened. We have seen a kind of a pullback as I've discussed in SGX as well at 1600 and 10, 16, 20 level. We have seen a smart move. This is what a smart investors do. They don't go with the trend. They take a contrary position and try to take the leverage and the benefit of the risk reward ratio. So risk reward ratio at 1620 was quite favorable with just 10 or 15 points of downside. The upside was potential to almost 30 to 40 points. And this is 8 days moving average, simple moving average. And if you see the RSI over here is still bullish, though I believe that once we close above 1660, we may see a next leg of setup, and prices may retrace till over here, and we may see another. But this is like midterm view I have, and a closing above this channel should be there, because if you see overall chart pattern, we have seen this decline, and then we have seen uptrend, decline over here, uptrend. This was a kind of a say duration was higher and consolidation, since we have had a Federal Reserve meeting, but then this can be repeated to this. So it's kind of a flag pattern on a consolidation basis, and we may see a next leg of 100 points over here. So be on the buy on side, buy on dips strategy. RSI is still comfortable at 44 levels. MACD is still positive and may test these levels. Falling channel is of course there, but a breakout above 1660 I already mentioned we will see 100 points to 1770. If you have any queries related to these, you can of course ask them at the end of the webinar related to any stock or related to particular account or your portfolio or your holdings which you are holding and you are facing loss in them. You can ask them post this webinar. I'll give you some of the recommendations now into the market which you can go and buy as soon as market opens, and enjoy your weekend till these recommendations and signals make some money out of money for you during this holiday season. My first would be Ward Industries for Singapore and Singapore clients. Quite a beautiful chart, a nice setup is there, though it's a midterm view, so anyone who's looking to invest for like uh, a month or two is very much welcome to invest and go to enjoy your holiday season. The stock is on a lower support trend line over here, and we have had a weekly positive candle. The overall bullish momentum from here is being seen almost say a 200% return, 300% return is seen. Of course, so as one, Nase, I will answer your questions. Just let me finish up with these recommendations, then I'll come to your uh, queries about the stock and holdings and portfolios. Okay, so the chat setup we have in the ward is quite beautiful. The risk reward is actually favorable because if you see and note that on the lower support trend line, whenever there is a positive closing, the stock has actually given a sharp up move. So at this point of time at 0.280, I think the risk reward is quite favorable with just a stop loss of 210. I think there can be a move till here 0.400, and if it breaks we may see stock again going to 0 0.6. The probability of this particular counter going to 0 0.6 is much higher. Why? Because I'll tell you what, it has completed a wave formation over here, ABCD, and both have same harmonic patterns as well. If you see RSI, it is contracting now along with bullish divergence on the RSI. MACD is contracting now along with bullish divergence of RSI. So from this point of time, I think this particular stock is going towards a 0.600 level. Risk reward is quite favorable over here, just 70 cents of a risk, and you may see kind of a 200% or 250% return over here. So anyone who's seeking like a midterm view on any recommendation or signal to hold on for and mint some money, you can see Ward Industries specifically for SGX clients, and it may hit your target by January end. So first recommendation is Ward. Nice setup on the chart, a declining channel, but RSI is giving bullish divergence. The prices are down. RSI is giving a bullish divergence over here. MACD as well has a positive contraction and may see a crossover in coming week. So I think buy on dips is the strategy. Our target is of 0.600. Our stop loss would be, or cut loss would be 0.210. This is a midterm view, so invest with the time horizon of 1 month or more so that it can eventually make you the best optimum return out of it during the time I've provided. My second recommendation for KLSE clients from Kuala Lumpur, Malaysia, Kuala Lumpur Stock Exchange is Brahims.kl. You can search for the code, and the setup is actually I've taken a weekly chart. So of course this is also a midterm signal and a recommendation for the clients. If you see overall chart, the overall wave pattern has actually ended for this particular counter over here, and we have seen a 5 wave complete cycle. Now the stock is in corrective wave C, and you may see kind of a rebound or C, wave C, corrective wave C, approaching towards this level of 1.400, 1.900 in the short term, since there was, if you go by the patterns, of the charts, uh, there was a lower top lower bottom formation, falling wedge, and prices have given a thrust, a breakout over here with a spring pattern. If you have known a Wyckoff theory of technical analysis, spring pattern is there on the chart as well. We have seen this counter rally from same level towards upside above 2. So at this point it comes cheap. The RSI is comfortable and is moving along with the prices. MACD crossover is there. If you go by the retracement, I think the possible targets are at 1.4 and 1.9 with a midterm horizon till February end. Sorry, mid-February. So one can go for Brahms with a time horizon of 45 days. Our potential targets are 1.400, 1.900, and our risk reward ratio is quite favorable. You can put a stop loss at 0.850 on the downside. You can note this counter. First was Brahms, sorry, Ward for Singapore clients, VARD, with a target of 0.600, stop loss of 0.210. Second is Brahms with a target of 1.900 in the midterm with a stop loss of 0.850. Now, of course, you'll be happy to know that we have our representatives which will be there for next 2 weeks in Singapore and Malaysia as well. So you can book an appointment with them if you want to have your portfolio being looked at, and if you want to have some insights on the market, how you're going to perform in next year. They'll have some kind of a recommendations and signals for you as well, and they'll look at your portfolios and holdings. You can seek their financial assistance in matter. You can discuss with them. You can discuss your holdings, and you can discuss your overall portfolio to them about the markets as well. And you can call on these numbers or mail on these email IDs if you're looking to have a direct if you're looking to have a direct conversation with our representatives. The next slide is totally made for your comfort. This is the link which I'll be sharing with you guys, and I'm sending a link over to you guys. You can save this link if you're looking to meet our representatives in Singapore and Malaysia. They'll be there for next 2 weeks. You can seek your portfolio being advised by them. See, there is a kind of a balance in your portfolio which you need to have. I believe that if you're not earning from profit, there are some recommendations which are giving a return of 600, 700% in a time frame of like 7 or 8 months. What you need to do is identify. Of course, our representative will share with you some of the holdings of our clients which we have recommended to them, the ultra HNI clients like SKP or InnoValues in SGX or SKP and KLSE, and they have given a phenomenal return of plus 1000 percent in last 1 year. So we have designed a kind of overall strategy, overall portfolio, which is churning the optimum result. Though market, if you have seen the chart, has been in consolidation, but still if you're not earning from recommendations, see, events like Federal Reserve rate hike, economic data, they do come at time to time. But what you need to do understand as a trader is that you don't have to be worried where market is going. You don't have to be worried what Federal Reserve is going to do, or you don't have to be worried what market is going to take. It is going to like 3,000, it is coming to 1,000. As a trader, as a professional investor, what you need to know is that the holdings or the stocks that you are having in your portfolio is giving good return. So there are some stocks which are going against the market and minting good amount of money for the clients. So consult them, talk to them. The better you explain, the better you communicate, the best solution is can be seen from our end. So you can note these numbers: +65 315 81402 +60 392 121 923. You can book an appointment, meet them, and share your portfolio with them. We'll be happy to help. Upcoming webinar, of course, from now on, you don't have to register for each and every webinar. You just have to put your ID. You'll get updates automatically on your email ID, and you can attend webinar with your GoToWebinar Android app as well. You can visit our website www.epicresearch.sg, www.epicresearch.my, and you can see our research reports. You can see track sheets, and of course you can drop a mail at info@epicresearch.sg or .my. Well, thank you. It has been a nice webinar with you guys, just going before the holiday season. I hope I have shared a lot of insights with you about the market, since we are still into beginning of a series of a webinar for SGX and KLSE traders. This was initial one just about the market. I have had a various feedback of clients regarding a webinar of FCPO or FKLI or derivatives, some recommendations and insights into it. So I suppose next week after the festive season, I'll try to give you much better insights into FCPO, FKLI, and share positional targets with them. Now you can of course ask your questions. I'll be happy to answer each and every one of you one by one. Okay, first question first. Shazwan Nase did ask about K1 from KLSE, and what is my view on this particular counter coming at 0.315. I think it is being stuck in a range of 0.28 to 0.35. The prices are not actually moving, though I don't know if you are holding it from some time, what is the price you have actually bought this particular counter, but of course you can hold on to it. The volume is good. If you look at the stock, uh, cumulative volume as well has been much better. So hold on to this particular index. I think what happened is that a lot of volatility was there, so we haven't seen a kind of a movement which we need to see. But just in case, if you can let me know the price you are holding it from, it will be much easier for me to actually answer your query. Well, I don't know your price, but okay, for your convenience, I'm gonna share some technicals with you. The price is actually making a cup and handle pattern, if you know. They are into a broader consolidation range of 0.320. I think you can hold on to the stock. Accumulation has been seen. We need a closing above uh, 0.33 on a daily basis. We may see a price moving on to next level of 0.360. So of course you can hold on, though I'll suggest you put a stop loss on the this double bottom at 0.275. Hi, Stephen. Thanks for your query. Personal advice on your portfolio about diversifying. What I would suggest you now, it's all right. The time is good. The markets are at quite cheap valuations, but you need to look at various sectors and various you can say diversifying comes with investing in various sectors, be it like REITs or some industrials or heavy industrials, or you can go for bankings. But since we have had a lot of volatility, the investors have been jittery. So I'd suggest you can call us in that case about, or you can meet our representatives. Which I have shared my link. They'll be happy to answer your queries face to face over there. And of course, communication face to face would be much better from an experienced analyst. So, of course, thanks for your query. But you can ask our representative who will be there, or you can drop a mail to us, or you can contact us on www.epicresearch.my. We'll be happy to answer you in detail. Okay, the next question is quite okay, about crude palm oil. Uh, yes, my name is Lavlesh Sharma. The next query about crude palm oil is quite interesting. See, at 2420 2440, crude palm oil has actually made a double top. We recommended 25 to go short side. We did enjoy a rally to 2370 yesterday. Prices sustained 2370 today as well, but I believe below 2370 we have a more leg of room towards downside till 2330. So of course I'm still sell on rise until we see a closing about 2440. So still the strategy is sell on rise. If you are seeking a specific level, I think 2370 is a very good support, breaching of which we may see a next level of 2330. If you have any more questions related to any stock, you can ask, because we are just about to end this webinar. Thanks for your question, Sazwan, Stephen. Uh, okay, one more query. Any comment on comfort, and if, do you have any position in this particular counters? See, I believe comfort. You are asking about comfort globes, right? And even. Okay, just a second. I'll answer your queries, and then we'll take another question about FKLI. Even at 1.150, uh, just hold on, I'm loading the chart. The trend looks up, higher tops, higher bottom from 0.600 level. Breached is June 15 high of 1.0435. I don't think there is any problem, but yes, the declining volume is a kind of negativity in price. But of course, if you're like sitting in a profit, I'll advise you to book or take profit uh, next week. Book like 50%, trail your stop losses to your cost. I think the next stop is probably coming at uh, 1.390, but you'll have to hold on to that for like few weeks. I'll advise you to put, if not at cost, you can put your stop loss at 0.950, which is the next previous lower bottom which we have seen forming. So overall good, chart is still bullish. There is no problem with the chart, just that keep booking profits, taking profits, right? And your another question was on comforted Delegro, right? It is coming at comfort gloves, I guess, coming at 0.945. Well, today it was down. Let me see the chart thoroughly. Nice counter, continuous upside. a kind of cup and handle breakout. The price is actually double bottomed at 0.700. Today it has seen a profit booking. I think I advise you to take profit because the volume has been high. The prices have reversed. We have a resistance trend line. If you see, drawn from May 2015, we are seeing some kind of resistance at 1.00 and 0.980. So of course, I'll recommend you to take profit. If not, trail your stop losses. That will help you save some money. Yes, for comfort gloves, the bearishness, the volume has been higher. It is a kind of a short-term trend reversal, and we may see some kind of a profit booking in this particular counter in coming trading sessions, and it may see a correction to 0.905. So strictly put a stop loss or a cut loss at just around your cost price, and if possible, take profit as soon as possible. If you have any queries, you can mail us. Myself, Lovely Sharma from Epic Research. Thank you for being part of this webinar. Have a happy weekend.